Welcome to Financial Focus, brought to you by Gulf Coast Financial Services founder and CEO, John Kuykendall. John and his team of financial, legal, and tax professionals have provided North Florida savers and investors sound, comprehensive financial guidance for over 25 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting gulfcoastfinancial.net.
And welcome into the program. This is Financial Focus, brought to you by the best of the best in financial services, as named by the Lake City Reporter. 6 years and running, the team from Gulf Coast Financial Services and sister company Gulf Coast Tax Advantage. Founder, CEO John Kuykendall here with us, keeping us focused on our finances and giving us the guidance that we all need. John, always appreciate your time and your guidance. And you wanted to start off today with some updates on Social Security.
Yeah, Peter, I got an email in the email box this week that talked about Social Security's doing a new statement and that you have to go online. Of course, they don't mail them anymore.
Right.
And so I went on and printed out a sample. And it's really interesting because, you got the graphs, and on the back page, it talks about all of your years of employment that you can check. And we encourage everybody to check those because Social Security does make a mistake from time to time. And also, we've had some clients that have had filings under two Social Security numbers because their employer made a mistake. So you want to be sure and check those. But I thought it was really interesting. On the old statements, it used to say down in the bottom of the first page that Social Security was scheduled to run out of money in 2030, whatever.
Could only pay a fraction or a portion of the promised benefits. Yep.
Right. Well, the new statement is interesting because down at the very bottom, it says, we base benefit estimates on current law, which Congress has revised before and may revise again to address needed changes. Learn about Social Security future at SSA.gov. So what they're telling you is that the Congress can make changes anytime they want to. And this is an estimate of what you'll make. It's not a guarantee of how much you'll make. I thought that was really interesting, and I wanted everybody out there to understand that. And then again, it talks about the fact that Social Security is not meant to be your only source of retirement, that you need savings and investments and other things for retirement.
Well, John, you've made the comment before that when it comes to retirement, the tax code and the laws are written in pencil. It is Congress, in fact, that holds the eraser and the pencil. And I guess this new Social Security statement, the new version of it, is kind of emphasizing that they have, and they may need to, again, change the rules and the laws on this. And that probably raises a little bit of an eyebrow and a point of concern for you.
Well, I think a lot of people have been under the assumption that this is their Social Security benefit. They're going to get 100 cents on the dollar, and it's going to last as long as they live. That's not necessarily the case. I know back in the 80s during Jimmy Carter's administration, he came out with something called Notch Social Security. Social Security was running out of money, and so what he did was he went in and notched out a group from 1920 to 1925 and said, okay, that group is only going to get 75 cents on the dollar. And they did, because my dad was one of them that drew it. As long as they drew Social Security, it was never made up. And at death, it wasn't paid to the family. So Social Security can make up their own laws as they go.
Interesting. And I know that they've changed rules and laws on it before. I mean, Social Security initially was intended to be a tax-free source of income. And I think it was 1983 under Reagan, they made it taxable. If your income was so high, 50% of it could be included in the taxable equation. And then under Clinton in 1993, again, they made another threshold, and now up to 85% of your Social Security could become taxable. So they've changed rules. The full retirement age used to be 65. Now it's 67. They've done this before, can do it again.
Right. And they can raise the retirement age to 70 or whatever they want. So, I mean, that people just can't rely on this to be their only source of income. And that brings up what we'll talk about later, which is our income plan, the need for an income plan. But, before we get talking about that, everybody's talking, Nate, about inflation and how things have gone up. And I just want to give you one little example, which hit me yesterday. 2 years ago in December, I bought my son and I a coffee maker. Now, I splurged and got the espresso model, the one with the beans that grinds itself and all that.
Nice.
But it was the lowest one. It was the cheapest one I could find. It was $495 each. I bought two of them, one for him, one for me. Loved my machine. So yesterday, I got a thing in from Amazon that said, we thought you might like to look at these. And it was coffee makers, which started out to about $1,700 and went on down. But what was interesting was I found my coffee maker, the same one, and Amazon said, you have bought this in the past. Do you know how much it cost?
I'm assuming more, and now yours is on the market for a slightly used version?
$795.
Wow.
In 2 years. So, yes, I should have bought two and sold one. I could make a little investment. That's pretty good return in 2 years.
Not bad at all. But we're on the other side of that now. If you want another one, you've got to pay more. And that's we're
right.
seeing for most of the things that we purchase, even big purchases like that. But the routine items that we're purchasing day in, day out, week after week, month after month, John, those have gone up in price as well, which again circles back to the premise of what we will be addressing on today's program, which is income planning in retirement. You've got a couple quick reports that are included in the Countdown to Retirement series that you have been talking about. And the premise of these is that we've got a plan for income, and we've got a plan for income for quite a long time.
Well, that's true. And, Tom Heglia says that longevity is the biggest risk in retirement. And he says that over and over again. And I really think it's true that longevity, because we are living longer. And with the medical advancements we've got now, we're going to live to 85 or 90. We just don't plan anymore for a 15 or a 20-year retirement. We have to plan for a 30 or longer. And so longevity is the number one risk, the single biggest risk, and will make the biggest impact on your retirement, because who wants to be at 80 and run out of money because you didn't plan? And that goes back to what we always talk about, Peter, is the need for an income plan. But with that income plan, we're going to be able to hopefully use some inflation numbers, give us the amount of numbers that we need, and then be able to show people how we can make some changes, make some tweaks, and do things that they can do to make their retirement the best they can have for the longest period of time. Our income plan in working is the fact that I work every day, and for that, I get paid. And my income plan is I work, I get paid. Now, in retirement, I'm not working,
right,
but I've got to get paid.
Yep.
So I'm going to pay myself out of what I've put aside. And I think that's the hardest thing for people to realize is that at some point in time, there's going to come a point when you either don't want to work anymore or you physically can't work anymore. And then what is your income plan going to be during that time?
Yeah, John, the report that you have here is the 2 questions to answer before you retire. Question number 1, what single financial risk could make the biggest impact on your retirement? As you mentioned, you, as well as many, many others in the financial industry, experts, gurus, whatever you want to call them, but scholarly researchers, PhDs, have studied this, and they say resoundingly the single largest financial risk that could make the biggest impact on retirement is longevity. And then question number 2 to have an answer to before you retire, well, if that's the biggest risk, how can you eliminate the possibility of this risk ruining your retirement? So how can we formulate a plan to address longevity? And that, I think, is really the critical component and the thought process behind an income-first philosophy to planning. We need that income plan.
Yeah, we got to have the income plan, Peter, in order to put all the components together, Social Security, Medicare, taxes, all of the things that are going to be your components when you live. How is your income going to affect your Medicare, your Social Security? You talked about that up to 85% of your Social Security is taxable. it's not taxed if you that's the only source of income you have. But if you have other sources of income, then up to 85% of your Social Security will add to your taxes. But not only that, more of your Medicare, more of your Part B Medicare is going to cost you more. There's all kinds of things that go into play with this if we're not careful and we don't implement that income plan, that financial focus income plan.
Yeah.
But you got to remember too that, as I just mentioned earlier, inflation is going to be a bigger and bigger component as we go forward, because we're not going to be working as these new minimum wages take place, where we're paying McDonald's people $15 an hour. You're not going to be able to go in and see the dollar menu anymore. So your hamburgers, everything you do in life is going to cost you a lot more. And I think the pandemic has created a backlog of materials and supplies. Everybody I talk to says that they have trouble getting materials to do the job. And those materials are costing more because now the labor costs more and the startup costs more. So it's just a rippling effect. Finding people to work is a problem. So that's created a supply chain.
But John, again, it goes back to income planning, rounding home on your countdown to retirement. What is the number one most important factor determining your planning and your retirement success? That is income. So John, if this is such a concern and if inflation is now compounding on that concern, is there a way to work inflation into having that written retirement, financially focused income plan?
Oh, sure, Peter. We include 2% inflation anyway when we're running our plan, because we don't want to be underestimating. So there are ways to get increasing income. There are certain ways that we can do things so that we can have more income coming in every year. We can stagnate. We can have multiple annuities that pay at different times. There's all kinds of things that we can do. We can even do a Social Security maximization, so we can have income coming in while we're waiting to get Social Security at age 70. But, Tom Hegnia says that one of the ways to mitigate the longevity risk is by securing a fixed, guaranteed source of lifetime income, or at least a guaranteed source from someone of income, such as deferred annuities. So, there's got to be some, as we say, I like to say, predictable, sustainable income coming in every month. The one thing we don't want to do is do asset allocation and have our assets, the money that we've accumulated in our investment accounts, having to rely on those, because that's just not going to work. We've proven that over and over again.
Well, we've seen that account wash away without us having anything to show for it, without us having spent it. I don't want my retirement nest egg that I am depending on to produce that income that I want to be durable and reliable and dependable, as you said. I don't want that, or I don't believe that I can afford to have that, any kind of portion, 10%, 15, 20% of that disappear in a market downturn without me having anything to show for it and without having taken steps to protect the income producing ability it has.
That's right, Peter. And the clients I have that have the best income, the most reliable income, the ones that are living the best life,
they're the happiest.
They're the happiest. They're very happy because they actually have a retirement benefit coming in every month in addition to Social Security. So they know that every month when they go to the bank, or every month when they go to their mailbox, there are going to be a couple of checks in there, one from the state of Florida or wherever their retirement is, the other one from Social Security. And so what we do is build on that and make sure that they have that inflation number covered. Income planning is so important. I just don't think we can stress that enough.
Well, conventional, traditional financial planning sort of ignores this factor. They talk about the investment allocation and the rate of return and the projections for the theoretical growth of the account. But the priority that in retirement we have on creating income from that account that is dependable, that traditional asset allocation model kind of ignores that fact or overlooks it or puts it as a secondary concern, John, which is, I think, the status quo and ignoring that factor is the reason why we see so many people concerned about running out of money in retirement.
Well, that's true, Peter. For many years, financial planning, all we talked about was if you invest your money, because I'm a financial broker, I have an investment accounts. So I want you to place all of your money with me, and then we're going to invest it in asset allocation. And if we make 10%, you can withdraw this amount, and at the end of the term, you're going to have $5 or $6 million left over. We know that doesn't work because the market isn't consistently returning 10%. We've talked about on the show. The market doesn't make the same amount of money every year. That's what makes it the market. It's very interesting that people would rely on their income source for something that can be up 30% one year and down 20% the next.
Well, again, I think that a lot of people have overlooked this, not any fault of our own, John. It's just something that we have not been taught to do, something that the importance of making this transition has not been emphasized, talked about, educated in the public of how to make this transition, walking away from the paycheck, but not walking away for the need for income. Now we've got to count on that portfolio to generate that income for us. It's the number one most important factor determining your retirement success and contentment.
That's right, Peter. Number one, if you're going to be content in retirement, you're going to be able to do the things that you want to do. And, we are doing more things in retirement. I mean, we're traveling more, we're doing more. You got to be able to have some kind of income plan so we know how much we can spend this year so we don't spend it all this year and not have anything for tomorrow.
Yep. And so, John, summarizing the program, we started talking about the new revamped look to the Social Security statements
Yeah.
and the worrisome language that's now included on those. By the way, not new, but it is restated in a different way that those laws can change, and that statement is kind of only an illustration based on current rules and laws. We talked about
Sure.
the concern with inflation that we are seeing, and we talked about your two reports, the two must-answer questions and the number one most important factor determining your retirement, which at its core, John, is the income that we can count and rely on. All that being said, you put together those financially focused income plans for your clients and retirement-minded savers and investors there at Gulf Coast Financial Services.
Yep.
Can you talk about that process and how somebody can get that in their hands, or how they might know if they do or don't have one already?
Well, what they can do, Peter, is give us a call. There's a certain amount, we have a checklist of the things that we need in order to prepare the plan. The plan is very simple. It comes out in about 4 pages. It is something that we put up on the screen. We go through with you. We'll look at your taxes. We'll look at Social Security. We'll look at Medicare. We'll tell you how to maximize Social Security and where your break even is. And then we'll run this income plan, and you tell us, based upon your current needs, how much money you're going to need in retirement. And then we're going to work out a plan based on inflation and show you where you're going to hit trouble. And one thing a lot of people don't plan on is that, when we lose a spouse, we lose almost half our income because we lose one Social Security check. You get to keep the highest, but you lose the smallest. And so we'll include that so we can show you how the survivor is going to be able to live. And what we're going to try to do is maximize your income during that retirement stage. Very simple, very complete report, not hard to read, no big book, not voluminous. You'll love it.
Well, I hear folks ringing for the plan already, John. And ladies and gentlemen, if you want your financially focused income plan, pick up the phone, give a call, 386-755-9018. That's 386-755-9018. 386-755-9018 to get in touch with John Kuykendall and the team there at Gulf Coast Financial Services, North Central Florida, your resource for the information, the education, and to get that financially focused income plan, specific, customized to your situation, put together, or to complete the current plan and double check to see what that income plan that you have currently looks like. Spot check it. See if there are any holes that need to be filled. Again, 386-755-9018. 386-755-9018. You can go online, gulfcoastfinancial.net, gulfcoastfinancial.net. You can get started there as well. Watch some great videos that explain the income allocation concept, why it makes sense, why it better serves retirees in addressing the biggest risks that they will face, that you will face in retirement. And if you'd like to take it the next step, you can do that online or right now by calling 386-755-9018, gulfcoastfinancial.net. John, we always appreciate you bringing up important topics, reminding us, if we have not yet, that we need to take action on these things in order to have a more secure, confident future and a better quality of life.
Thank you, Peter. It was great to be here.
It's always a pleasure getting to speak with John Kuykendall there from Gulf Coast Financial Services. He's looking forward to hearing from you, helping any way he can. Give him a call, 386-755-9018, or visit online, gulfcoastfinancial.net. We'll talk to you next time on Financial Focus.
Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting gulfcoastfinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities, Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services, Inc., a registered investment advisor in Florida. Gulf Coast Financial Services, Inc. is not affiliated with Kovac Securities, Inc. or Kovac Advisors, Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors, including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.